Folks, how are we doing today? All right, so today we are going to look at the Epic Total Returns Calculator 2.0, guys. I've made a couple of fun updates to it that allow us to compare the asset to its underlying asset and a couple other updates. I really like this Total Returns Calculator. It's a lot of fun. Let's just jump right into it. All right, guys. So we are here at the Patreon, guys. The Epic's return calculator will be available via the Patreon for all Patreon members. If you want to go to the Patreon, please see the description link below and come and join the Patreon. I cannot thank you enough for joining. All right, guys. So I am here at the total returns calculator, guys, and it is a lot of fun. It is a lot of fun to use. What it can do is evaluate the total returns, from a price only standpoint, evaluate the returns, including your dividends reinvested or without your dividends reinvested. All right. So it gives you those three criterias based on the selected asset that you've chosen in the time frame you have chosen. And gives you an estimate on your payout, your return, including the initial investment that you put in. The addition that I've made is the comparison with the underlying asset. All right. So if I have a covered call strategy that focuses on Nvidia, I can then add in here the underlying asset, which is Nvidia, and compare the total return of the underlying asset of Nvidia to this ETF that's focusing on Nvidia. So NVDY from YieldMax, and we can compare the variance between the two. Now we understand that likely the underlying asset, the majority of the time, is going to beat the total return performance of the this asset because with covered calls you're giving up some upside for the benefit of income, but it's still cool to evaluate the two of them and see which assets come close to each other between the underlying and the invested asset. All right, so let's evaluate QQQI as our starting point. All right, so QQQI, we're going to do from Jan 1 to November 8th. We're going to invest 100K into this asset, and the price return for QQQI is 3.48%. All right, our total return, though, including dividends, right? We had a great number of dividends that have been provided with this. And with dividends, our total gain is 16K or 16.59% on that 100K investment. And if you wouldn't have reinvested those dividends, we would have had a 15.28% return. So definitely in this case, a benefit to have reinvested those dividends. But now let's compare against the underlying, guys. All right, so the underlying asset year to date has done a 19.27% total return, whereas the target asset QQQI has done 16.59. So our variance here. So QQQ has beaten the target asset by 2.67% for the year. Now, if I'm seeking income and I'm looking at this, I'm going, all right, I'm giving up 2%, 2.5%, but I've been able to have a tax efficient income generating solution for me that's paying me out monthly. I don't have to think much about it. I'm okay sacrificing the extra 2.6%, 2.5% of upside for the benefit of that consistent income and that stability there. So, that's something you have to weigh, but this calculator gives you that the visibility to understand what's going on. Let's do another asset. Maybe um let's do another one, NVDY, like we were talking about before, right? So YieldMax is Nvidia strategy, right? And let's compare that against Nvidia, the underlying asset. So now with this one, the total return for NVDY has been 22% year to date, but Nvidia's total return year to date has been 40%. So you've given up here 17% in total returns, guys. That's now where you might want to think, like, is it worth for these underlying assets, for these individual stock plays? Is it worth sacrificing that much upside? Or is it just a benefit just to buy the underlying asset? That is something you have to weigh. Of course, you're seeking that income from NVDY, but you could always just sell some of your own appreciation on the way up with Nvidia. Of course, it's not as easy to do. just with when do you sell, when do you not sell. But it's just something to consider, guys, when you see this massive variance of 17%. Should you have just invested in Nvidia versus NVDY? That being said, if we look at NVII, which is Rex's Nvidia growth and income ETF, this is a different story. You can see here a 45% total return, whereas Nvidia has done 40% return, right? So in this case, with Rex's, they've actually exceeded the performance of Nvidia, and that's because they are using leverage. And so you're going to see a more benefit on the upside with them, but also a lot more negative on the downside relative to the underlying asset of just Nvidia. But in this case, it can net you a better return than the underlying. It's an interesting comparison. Let's do one more. Let's look at SPY. All right. So SPY has done a 13.73% total return with dividends reinvested. Compare that to SPY, and really we have a sub 1% variance, guys. So really, really strong performance for SPY, and it's been able to almost match the performance of SPY, which is really what we want to see. We want to be, lock in step and connected to the hip in terms of matching the performance of the underlying. That can give you reassurance that, hey, I can invest in a SPY and match my SPY returns, but give me that income along the way, guys. So this is a fun little tool set, guys. It will be available in the Patreon for you to grab. Let me know if you want to see other improvements to this solution, guys. I will look to continually update it, but it is fun. Go in here and change your asset. You want to compare QQQI to its underlying. You want to compare Robinhood to its underlying, or just see the total returns of these covered call strategies, these high income strategies. It's a fun way to do it. Another big thing that I'd like to do is compare, is it more beneficial to reinvest the dividends? For example, with ULTY, was it a benefit to have reinvested my dividends or to just not reinvest? And in this case, it's still a benefit to reinvest those dividends, at least for now. We saw for year to date a 6% return versus 5.54% return without reinvesting. But maybe like Misty. Let's check out Misty right now. Yeah, you can see here with Misty now, because they've drawn down so far, you can see that if you reinvested those dividends, you'd be at a negative 18% total return. Whereas if you didn't withdraw, if you didn't reinvest those dividends and withdrew, you'd be at a negative 3.4% total return. So, still not a good situation to be negative, but you've lessened the blow should you have not reinvested your dividends. So, it's tricky with these things. I think that, I like to stay away from the ones with massive NAV decay. Again, you look at QQQI, that's not really a NAV decayer. So we focus on those guys. All right, guys. So let me know what you think about this. Sub to the channel, comment below, and all the best. Cheers.